What's up, guys? It's Dan from Coin Bureau Trading, back at it again with another crypto market update. Today, we're going to take a look at Bitcoin and Ethereum, specifically the possibility that Bitcoin could blast above $200,000 in the next couple of months, and the possibility that Ethereum could rally by 30 or 40% in the next few days. Like by the end of the week, it looks like ETH is about to have a big move. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So speaking of differences of opinion here, guys, chances are if you're active on X or Twitter, whatever you want to call it, you've probably seen a chart like this, or a chart that looks like this, which basically overlays global M2 money supply with Bitcoin and with a 90-day lag, and basically foreshadowing that Bitcoin's about to see an explosive move above 200,000. If you have seen this chart, then you've probably seen also quite a bit of criticism of people saying that this chart is not accurate and that it's misleading and whatever. But when it comes to charts like these, or I guess like price predictions and stuff like that, I always try to think is like, what if it's possible that this is actually accurate, but for the wrong reason? And in this case, it actually ties into something that I've been watching for a while, and that's the possibility that Bitcoin basically tradable supply is being restricted, and that we could have a supply squeeze. This is something that we've also seen discussed a lot on Twitter/X, and of course, we've also seen a lot of people coming out and kind of pointing out the nuances and basically saying that, like, yeah, there has been a decline of Bitcoin on exchanges, but that's because a lot of this Bitcoin has been going into the ETFs. And when you factor in for the ETFs, you haven't really seen that big of a drawdown in basically balances in these different instruments, let's say, of Bitcoin. And the conclusion there being is that we can't possibly have a kind of like short squeeze event. But the thing is that, like, objectively speaking, the liquid supply of Bitcoin has been declining. Like, there's more and more people who are hodling. There's more and more entities that are basically buying and hodling, like a MicroStrategy, right? And we're seeing more and more publicly traded companies coming out and buying. And this does actually set the stage, in my view, for a supply squeeze, especially when you consider that the newly available supply of Bitcoin that's coming onto the market from miners, it's not very big. So if you continue to see these big buys from like MicroStrategy and these guys, it actually does set the stage potentially for a supply squeeze. And it probably wouldn't be very long-lived, but it could actually happen. And what's really interesting, guys, is that this has actually happened before, specifically like 40 or 45 years ago. I'm talking, of course, about silver, and this is where things get really interesting, and why I personally think that Bitcoin could go above 200,000. And again, this is something that I think not many people are paying attention, because everyone is assuming that Bitcoin is digital gold. But if you actually look at Bitcoin's properties, it's more like digital silver, especially related to actual gold. Like people who say that Bitcoin is digital gold, they see Bitcoin as basically being like a higher risk, higher reward version of gold. And historically, what was that? That was silver, right? And if we look at the history of silver, specifically during the 1970s and 1980s, what's really fascinating, guys, is you can see that silver had a 6-year, whereas Bitcoin is a 4-year cycle. Silver had a 6-year cycle at the beginning of, or I guess in the late 60s, it had like one kind of like initial cycle. Then it had a second cycle in 1974, and then it had a third cycle where when it kind of broke above, when that trend line was tagged for the third time, it broke above and saw an explosive move to the upside. And this was basically because of not a short squeeze, but it was because of the fact that three brothers, I can't remember the name of the brothers off the top of my head, but basically three brothers had bought up something like 1/3 of the tradable supply of silver. And then when people started aping in, it caused this massive basically, like, for all intents and purposes, it was basically like a short squeeze due to a supply shortage that everyone was buying, and like no one could, deliver. And then you just had this massive rally up where silver's price basically tripled over the course of like 4 or 5 months. And I actually think if we look at Bitcoin, this might seem a little bit crazy, but we're looking now at Bitcoin on the monthly. This was silver on the monthly back here. And again, same thing. Bitcoin has this 4-year cycle. And if we draw just like a trend line above the peaks, the same way that we did for silver in this chart here, you can see that when that third peak really gets, when we see a break above that third peak, prices just go parabolic and they just go exponential. And if we were to assume a similar return profile to silver, which, to be honest, I actually don't think we would see a move that big. Like, I don't think we would see a tripling of Bitcoin's price, mainly because I think there's going to be a lot of psychological resistance. Once we start approaching that $200,000 level, if we get close to it, I can bet that there's going to be a lot of people who will be taking profit around there, just because it's a psychologically comfortable level. But that being said, the idea of basically 4-year cycle, 4-year cycle, 4-year cycle, and then in that third cycle, you get a break above and a massive parabolic move as a result of a relative supply shortage because of MicroStrategy and these guys. I actually think that's pretty possible. What are the exact chances of that? I don't know. I should say that, for the record, that my personal target for Bitcoin is around 140, 260,000. But the possibility that, some supply shortage of some kind could take it even higher and up to around 200,000, creating a massive move like we saw in silver in the 1980s, especially given that, objectively speaking, I think investors are treating Bitcoin more as silver than they are as an actual gold, because they're saying it's digital gold, it's higher risk, higher reward version of gold. And again, historically, that's what silver was. So Bitcoin, in my view, is playing the role of silver, and even the supply dynamics are identical to silver during the 1970s. And of course, that squeeze in basically was in early 1980. And potentially, theoretically, this would foreshadow like a massive squeeze in the coming months that could take Bitcoin above 200,000. Again, that's not necessarily my base case, but it's something I want to flag because it's something that not enough people are paying attention to. And it's also worth pointing out real quick while we're on the topic. Yes, global M2 money supply is not an accurate indicator of liquidity, but even the most accurate liquidity indicators from Michael Howell and these guys, they all foreshadow liquidity rising over the summer. So the trend of this chart is correct. Whether it's going to translate to a 200,000 Bitcoin price, that's probably, that remains to be seen. But the fact that liquidity is going to rise in the coming months, or is going to have a positive impact on Bitcoin in the coming months, this actually seems to be in line with more established, more recognized liquidity indicators. So this is technically accurate. Same thing. Is the supply of Bitcoin on exchanges, or is the supply of Bitcoin on exchanges and ETFs as low as the on-chain indicators make it seem? Probably not. But is the direction of that trend in like accurate? Yes, it is. The fact of the matter is that there are more hodlers. There is less Bitcoin on exchanges. Is it as much as some of these indicators are showing? Probably not. But the trend is correct, and that again, that foreshadows that, are we going to see a squeeze to the extent that we saw of silver, like a tripling in price of Bitcoin when it breaks above 100,000 or 110,000? Probably not. But a doubling, that's something that's theoretically possible. And of course, that takes us into the 200,000 range when you're doubling from $110,000. So this is something that I'm going to be watching very closely in the coming months. And safe to say it's going to be interesting, especially, what happens after that blow off top. Well, I guess we'll have to come to that when it's time. Anyways, guys, as you guys might have noticed, we were using Binance there, at least for Bitcoin. We have a 20% trading fee discount with up to $600 in bonuses. And again, if you're not able to use Binance for whatever reason, we do have other deals on other exchanges for US users, UK users. These deals are available exclusively through the Coin Bureau. They won't be around for long, so do take advantage of the links, take advantage of all these deals using the links down in the description. And again, like, these are the biggest deals you can get exclusively through the Coin Bureau. The exchange gets a new user, you get a cut of the trading fees. You get a discount on trading fees, and we get a cut of those trading fees. Sorry, it's Monday, guys. You know how it is. So yeah, take advantage of those deals. They're really going to help you out. 20% doesn't sound like a lot, but trust me, I know from experience that those fees do add up, and every little bit helps. And that $600 bonus potentially could also help out as well. Anyways, guys, moving on now to what I think is even more interesting is Ethereum. So one thing that I actually missed, or I guess I'll preface this by saying, like, why do I think that Ethereum is going to have a big breakout this week? This is for multiple factors, but I guess we can look at, I guess we can simplify them as kind of like off-chain activity and on-chain activity. In terms of off-chain activity, what's really interesting is that the spot Ethereum ETF saw their biggest inflows of $104 million net inflows last Friday. That was the biggest net inflow, I think, in weeks or maybe even months, which is really interesting. And of course, the inflows have been ramping up since, basically over the whole week. Like, we were seeing outflows. And then early last week, we saw 38 million net inflows one day. Then, of course, we saw some net outflows, but then 63 million and 104 million. And you can see that the trend is starting to increase. Whether that trend is going to continue, who knows? But this is kind of a sign that investors are looking for more risk. And of course, logically, they're starting to look at Ethereum because it's the most accessible asset after Bitcoin. It's something that a lot of people don't think about. If you're someone who's, you're invested in Bitcoin and you see it's near its all-time highs, and you're thinking, what could be a nice catch-up trade here? Ethereum is and has been, for the last couple cycles. Yeah, Ethereum has been like the most logical catch-up trade, and people have been frustrated because you haven't really seen that happen. But I do think it's going to start. And another reason why I think that, guys, is that you can see what's really crazy. If you look on chain, the amount of stablecoins on Ethereum has grown. It's grown by like 40 billion over the last few months. And what's crazy is that this has happened at a time when the total value locked on Ethereum has been collapsing. So this divergence between stablecoin market cap and TVL, It's almost like the same way when you're analyzing a chart, you see a divergence between volume and price or RSI, like right, like you're looking at divergence between RSI and price. You basically see. I would say that you can make the same case for stuff like this, where you see a divergence with stablecoins growing rapidly, the TVL going down. That tells you, wait a minute, the stablecoin growth, that's showing that money is flowing into Ethereum's ecosystem. And yeah, of course, the TVL has been falling because of ETH's price. But if there's money flowing into Ethereum's ecosystem, eventually that will reflect in the price. And this is why I'm bullish on other, altcoins like Aptos, because they've also seen like substantial growth in stablecoin TVL, even though the price has been falling, but more capital is flowing onto that chain in the form of stablecoins and otherwise. So logically, it's only a matter of time before that price action, before it reflects in the price action. When exactly that's going to happen, no one can say. But I really do think that ETH is going to be, if not this week, then probably next week on the back of something, I don't know, like the Federal Reserve potentially easing interest rates, or some deal later this week related to Russia, Ukraine, or some tariff discussions or whatever, right? There's a long list of potential catalysts that could cause a huge rally in ETH. And I guess this brings me to kind of like the big reveal here. Maybe I'll make it a little bit bigger here. So as you guys can see, I actually am currently long. This is not through my personal account. This is through the institutional portfolio, or I guess a crypto account we have on Bybit with the Coin Bureau. We also do have a Bybit deal, so do check that out in the deals page. But as you guys can see here, I made a little bit of I went a little bit long, like back when ETH fell a few weeks back, but I went long again now, and I'm eyeing specifically the Bollinger Band moving average on the weekly here. We're on the weekly chart. The Bollinger Band moving average on the weekly around 2,500. That would be an increase of roughly 35 or 40%. With 3x leverage, I'm looking at potentially a 2x in the next week or two. Is that going to happen? We're going to have to wait and see. But I think at this stage in the cycle, the chances of there being another big leg lower, I think, are objectively extremely low. We've had, months and months and months of grinding down lower, and now we're finally starting to see signs of recovery, at least in the short term. As a trade, I would say that the risks here are to the upside for Ethereum. Whether Ethereum is going to keep powering higher after that, again, that's something we're going to have to assess. But in the short term, I would say my target for the next week or two max is around 2,400, 2,500 for Ethereum. And again, I am going long through the institutional Coin Bureau portfolio, and there's already a little bit of the position's already a little bit in profit since I started shooting. But of course, that could change. It could go down again a little bit later, this week, in the next couple of days, and then maybe by the end of the week we get some news and you just see an explosive move higher, the same way we saw with Bitcoin or something like SUI. That would be crazy. Anyways, guys, if you did make it this far, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.